Sanjay Kumar, MD at IGL, is now with us. So let's start with the Q1 numbers. Pretty strong, better, gas costs not increasing. The bigger issue is the spot gas prices, which continue to rise on a quarter-on-quarter basis. How do you see your margins panning out?
Let me first just summarize the results that we have declared yesterday. Our turnover has gone up by 157% compared to the last quarter, to the quarter last year. And sequentially, it is about 33% more. And our PAT is 421 crore, which is 72% more than same quarter last year, and 16% sequentially quarter on quarter. Now, coming back to the margin issue, 8 rupees 60 paise is our margin that we have earned per meter cube this quarter. Going forward, since, as you have rightly told, the spot gas prices are going up, there is pressure on cost front, and the margin may not be 8 rupees 60 paisa, but we still hope to maintain it at 7 rupees, which we had guided you last quarter.
Good afternoon, Mr. Kumar. This is Cheryl also joining in the conversation. Spot gas prices continue to touch new highs every quarter. This will definitely increase the costs for you, isn't it? And given that the government wants to increase gas usage in the country, do you expect some government intervention around here? And also we understand that the ministry is working on availability and pricing of gas for CGDs. What are your thoughts on that?
Expect or we hope that government will do something. I mean, we can only request government to consider. There are a few aspects that can be looked into, like excise duty, etc. The cost of the price of spot gas is a global phenomenon. There is nobody in this country who is controlling that. The prices are going up because of geopolitical issues, and they are likely to pose challenge for us for next 1 or 2 quarters till this geopolitical problem continues, till the European gas conundrum is solved. We will sail through these 2-3 quarters. There will be challenges. There is no doubt about that. Our margins will not be as high as they were this quarter, but we still hope to be profitable at the end of this financial year also.
So your unit margins were near the previous high owing to price hikes. Given that you have already taken multiple price hikes, given further rise in gas costs, do you think further scope to pass on the hike to consumers, given that there is a differential between CNG when you compare it to other fuels?
See, the difference of alternate fuel, whether it is petrol, diesel and CNG, or LPG and DPNG, or fuel oil and industrial PNG, they have there is not much headroom. Let's agree that there is not much headroom available, and that all these challenges are because of these geopolitical issues that is going on. So we can only these are the times when we have to tighten our belt and survive profitably through next 2-3 quarters. And we have geared up at IGL to maintain our margins, our profitability for this financial year. And we hope that the market will cool down in next 6 to 9 months.
Could you tell us how have the car conversions been given the multiple price hikes? Are you actually seeing some sort of a slowdown, or are you continuing to see a strong uptrend for that one?
Our conversions are still continuing at 15,000 per month level, which was the case earlier. Earlier it had gone up to 18,000. And one of the reasons that we are thinking twice before taking price hike is we don't want to destroy our market permanently. We would like to maintain the market so that when the commodity cycle cools down in next 9 months, we are able to capitalize on the market. We are able to give our investors better return, to grow again at the same rate that we have been growing for last 10-12 years.
OMC commission issue, has it been resolved? What's the commission earlier? How much are you paying now?
for the last quarter, beginning last quarter, and the quarter before that, we have been paying the higher margin. We have an agreement with OMCs on that. We have resolved that issue for the time being, and there has been an increase. Earlier it was 4 rupees some paise. Now it is more than 5 rupees. But we would like to inform you that that issue is no more the burning issue that was there earlier.
All right, Mr. Kumar, we'll leave it there. Thank you so much for joining us on the show, talking about the quarter gone by for IGL and the way ahead. And that was Mr. Sanjay Kumar, who's the Managing Director at IGL.